Canadian SME Small Business Podcast, where we dive deep into the world of small businesses and entrepreneurship. I'm your host, Maheen, and today we are honored to have a distinguished guest with us. Jeff Brown, the head of commercial solutions at Equifax Canada, brings a wealth of experience and expertise to our conversation. Jeff has been a driving force for commercial solutions, leading innovation and strategy to transform how credit is understood and leveraged within the Canadian marketplace. Under his guidance, Equifax Canada's commercial solutions have achieved multiple years of double-digit growth, driven by partner engagement, acquisition technology, and innovation designed to empower Canada's small businesses. Jeff is also passionate about creating and sharing small business insight and has been a keynote speaker in some of the industry's largest associations and events. Now let's dive deep into our discussion with Jeff as we explore the financial challenges and strategies for small businesses.
Hi, Jeff. On behalf of Canadian SME, I'd like to welcome you to our Small Business Podcast. How are you today?
Pretty good. How about yourself?
Very well, and very pleased to have you with us this afternoon. Now, Jeff, today we want to spend some time with you, and we want you to, shed some light on some of the most pressing financial challenges facing small businesses today. Now, Equifax recently released data indicating that 64% of small businesses are concerned about cash flow management. Could you share some insights into why cash flow is such a pressing issue for small businesses right now and how it might be impacting their overall financial health?
Perfect. Yeah, I absolutely can. So we just ran a survey out in the market this past month. And really, we found that cash flow is a number one issue. Not really surprising. We just got out of the pandemic. There's inflation, interest rates, a lot of things happening in the market right now. And why this is really a struggle for Canadian small businesses is a lot of small businesses operate on razor thin margins. So as you have all these pressures that come in, it really puts a damper on how they operate their business. And the old adage we use is that businesses need to be spending money to make money. So when you don't have money or you don't have access to capital or credit to be able to buy products or services, to put food on plates or to buy a piece of equipment to run your operations, it really is a hinder to you being able to grow and be successful and to really move our economy along. So really, we've seen this as well as a kind of a 22% rise in the debt levels that small businesses have in Canada this year as well. So again, we're running debt from the pandemic. We've taken on some more government loans through that as well. And really, there's a lot of burden on Canadian small businesses right now. So cash flow is your sense to operate. It's the gas to the small business engine. And when we see numbers like that come back, it is really concerning as we look to wrap up 2023 and have small businesses planning into 2024.
Correct. And in addition to the concerns and burdens on small businesses, inflation is also causing many small businesses to really increase their prices, which can have both business and the well-being implications. Jeff, can you elaborate on how inflation is affecting small businesses and what strategies they might be using to navigate this challenge?
Yeah, I mean, inflation is really interesting, right? So when you think about it, it's really cyclical. So there's more costs that small businesses have to take on, and by doing that, the first mechanism they have is to really increase their prices. When you increase your prices, you basically are adding back into inflation. You're increasing the costs of goods, so you're really just kind of creating more of a network into the old ecosystem as well. A big part of this and how small businesses can really think about this is that, yes, prices can be increased, but also think about where you have your best margins as well. Can you afford to shrink those down a little bit? Can you diversify? Because really, as we think about inflation, that's your number one way to react. Or it's maybe reducing the cost of what your services are, maybe looking at alternative providers. I know you're just talking around supply chain issues. That's really the first thing you end up looking at is that if you offer premium service, is there a way to kind of degrade that? Is there a way to offer like a middle tier service of your overall solutions? But inflation is really cyclical, and you'll see this a lot from the federal government talking about inflation, is that all the mechanisms they've put in place have actually kind of let it go a bit further as well. So be conscious of your pricing and just where you can afford to reduce your margins for certain products. Really think about that, and maybe it's having lost leaders in certain areas to grow other parts of your business as well. But inflation is cyclical, and it's really something that again, pricing is your core mechanism to be able to respond to inflation.
Right. Another challenge is the supply chain disruptions, which has been a major issue for businesses of all sizes. Jeff, how are small businesses in particular grappling with these disruptions, and what advice would you offer to help them mitigate the challenges they're facing in their supply chains?
It seems like there's been so many challenges to supply chain. I mean, during the pandemic, it was that businesses were closing and not enough products were being produced, whether it's a vehicle or microchips or getting fridges, stoves across the world. And then we had wildfires this year, we had floods, there's conflicts all across the world in different countries. So I mean, there's challenges that seem to keep on persisting and getting even more difficult. I will say that now that the pandemic is seemingly over, a lot of the core issues on supply chain distribution have simmered quite a bit. But there are things that come up here every now and again. And how we think about small businesses, I mean, it's easy to say, but you end up playing a bit of a war game with yourself. When things are running well and you have your supplies coming in, it's great. You just want to keep on operating and make sure that you have the cash flow coming in. But you almost have to think about it. If I didn't get information or products from my core provider, who would I look to? And it's a way of engaging and having those conversations. You almost have to expect that something's going to happen, and that's the best way to counteract supply chain issues. Is knowing that you don't have just a singular supplier that you're core relying on, is have those conversations. So if there is ever disruption, or in terms of volume or the product coming across in timely manner, I mean, there were strikes in some of the incoming flow of goods as well. So whether it's containers or even the container barge that was stuck in the canal the other year, I mean, things happen. So you almost have to have alternative plans and not always just have a single source of being reliant. If you do, I mean, that's how you can fail. So being open to other conversations, being open to other products that could come in that you're distributing or are augmenting within your business, is always have an alternative in place. And luckily, the pandemic, if it's taught us anything, is that anything can happen and you have to be able to be dynamic. Luckily, Canadian businesses or small businesses are really optimistic and really resilient. So I know a number of small businesses are having these conversations, but as we keep on having more of these issues, it's even more of an excuse to go through and just diversify where and how you can.
Talking about optimism, Jeff, as we approach the holiday season, what's the lookout for small businesses? Are there any trends or strategies that they should be aware of to make the most of this crucial time for their businesses?
Yeah, I mean, in a lot of industries, the holiday season is really a boom, right? As part of our survey, we did ask a few questions out to small businesses as well. And unfortunately, we only see about 15% of businesses think that this year is actually going to be better than last year in terms of overall sales. So again, it's not necessarily the best story, but that's really where a lot of cash flow does come in. Luckily, we are exiting a summer that was really strong for Canadian tourism and the hospitality industry as well. So if that trend can kind of continue here into Q4, it could be very, very strong. One thing that we really watch out for is when there is a large insurgence of cash for small businesses across Canada, they can close their doors at any time, right? So you don't necessarily just have to exit by going bankrupt. Some can say, okay, hey, the overall market isn't working for me, I'm just going to shut my doors. A lot of how small businesses operate is they will go through, bring in an insurgence of cash and basically close the door. It's like, hey, we had our blowout sale, and really that's how it's ended. But realistically, when we think about us as consumers, we're hit with interest rates. We're all, fearing our mortgage renewal. We don't want to necessarily have to buy a new car because the cost to actually finance something is very, very expensive. So I think as small businesses, we're all thinking, okay, well, are there going to be the same amount of consumers that come through my door to buy products? And I think really that's a call out to us as consumers as well, is that your dollar goes so far with a small business and helping your local economy, as well as just, again, small businesses in general. Most of the businesses in Canada are small. And so if you can spend any dollar throughout the holiday season, I encourage you to spend it on the small business side, just because, again, they rely on these more than the large corporations. Their margins are a bit smaller. So I think it's a story for us as consumers, is just where you have a dollar to spend. Again, your wallet's going to be a bit tighter this year. Spend it with a small business because it is helping employ local, and really it's where money's needed right now.
Now, I know we went quite in depth with the post and pre-pandemic times. Jeff, government support programs have also played a very significant role in helping businesses during the pandemic. Can you provide an overview of some of the most key government support programs available to small businesses and how they can access these resources?
Yeah, I will say that the federal government really stepped up during the pandemic to help support small businesses. I mean, the key one was the CEVA loan program, the Canadian Emergency Business Account. And that was about $49 billion worth of funds that hit the small business market and went out to almost 900,000 small businesses. So if we've seen in the news, if any small business actually had picked up that loan, which was around 75% did, it really did act as a lifeline. I will say it was a lifeline and not a bailout. And that's really where the core part of the conversation's happening right now. If you took out the full $60,000 that small businesses were eligible for, there is a forgiveness amount that the federal government is willing to provide back. And that's in around $20,000 if you pay that loan back in full by the end of this year. What's really challenging with this is $49 billion went out. Only 20% of businesses have actually been paying these back, have paid these back in full. 10% have paid a little bit. 70% haven't put a dime into it. And with that forgiveness period ending here in about 100 days, it's really unfortunate because at the same time, that debt level is going to be at that higher amount, and you're going to have to hold that for a longer period of time. So when the interest starts to accrue, small businesses are going to be a bit challenged. So it was a strong relief valve. The federal government has stepped in to help. And I think really what that shows us as well is that, again, we're talking about a lot of headwinds, interest rates, inflation, supply chain, like you name it. If this persists and small businesses are still under these challenges, I think what we can really do is look to the federal government. They're not going to allow Canada to fail. That's what CEVA really did, was help kind of get small businesses through. If this plight does continue on, the federal government will step in to support. And when we saw this at a municipal level, provincial level, there was a number of different programs depending on where you were as a small business. I mean, fisheries out in Atlantic Canada, for example, had their bespoke programs as well. There was a lot of municipal governments as well that stepped up and were trying to understand how they could broadcast this out. A number had different problems. If you were near kind of a main port, it was small. It was really the government looking at, okay, well, how can we go through and make sure that the goods are flowing? If your town was around tourism and it was around restaurants, it's okay. Well, have you closed fully? Have you altered your menu? Do you have takeout? How are you advertising this? And really, government across the board, municipal to federal, we're really going through and helping out. So a number of those programs help stand Canada up. But unfortunately, a lot of those have subsided, and like kind of the call back to any outstanding debt is coming up. But again, if we don't see more payback actually happening by small businesses, look for the federal government to really step in and show support in certain areas that essentially they're not going to let Canada's small businesses fail. So they're keeping an eye on it. We as Equifax are doing that as well. We're conscious of the debt levels, and we're trying to provide advice and recommendations where we can when we're involved in conversations.
No, thank you so much, Jeff, for providing an overview and some insights there. Now, with rising interest rates being a concern for many, how do you anticipate these rate hikes will impact small businesses, and what steps can they take to manage their financial responsibilities in this changing interest rate environment?
Yeah, I mean, it's something we don't even really have to anticipate. We're seeing some of this information right now as well. So interest rates have climbed quite a bit here over the past year. Us as consumers know that, and small businesses are seeing that as well. We think about that, like I mentioned, on your mortgage, on a car loan. The small businesses are seeing that. Big part of that is they take on working capital loans to pay for, again, that new piece of equipment or to expand to another location. What we're seeing is a reluctance for small businesses right now to take on net new small business loans. We've actually seen a rise in the number of credit cards that have been stood up. So about a 67% increase this year compared to last year for net new credit card activations. And what we're seeing is with those credit cards, small businesses are transacting on them a lot more than they were last year. So with that, essentially, they're almost playing, it seems like a waiting game, is using your credit card to maybe wait for interest rates to go down to take on that larger loan to grow up your business. But I will say it's a double-edged sword, right? While it might be a temporary relief to help you bridge across, if you're transacting, it's fine. You're paying it off in full at the end of the month. But if you're revolving that debt, you end up being worse off because interest rates and credit cards are exorbitantly high. So it's being used as a stopgap right now for small businesses, not necessarily to support them out. I will say at the same time with these federal loans at that $60,000, we are seeing some variations happening in the market. So there's a lot of predatory lending that's being suggested out. It's like, hey, I can offer you $60,000 to pay off that loan in full. So you can get that $20,000 off the leaf, but you end up signing up for a loan that is much worse in the long run. That payback period is over a longer period of time. The interest that accumulates isn't to your best interest. So I think every small business who's in that situation that you can't pay off your CEBA loan in full, you really have to look at your long financial outlook about, hey, is this good for me just now? Is this good for me in the future? So we have to kind of expand our notions and expand our horizon of how we understand credit and how we work with it. Because you want your business to survive the long run, not just for the next few weeks. So think down the road, because the more you do, the more success you'll have.
Absolutely. Now, Jeff, before we wrap up today's, insightful conversation, I'd like to tap into your wealth of knowledge one last time. I know we touched base onto many different challenges that small businesses are, going through lately, from facing, challenges from cash flow management to supply chain disruptions and more. What advice would you give to small business owners who are facing these financial challenges? And are there any practical steps or strategies that you recommend that they can take to navigate these issues and ensure the health and resilience of their businesses?
Yeah, it's a great question, and I can offer back kind of what we see that's happened in the market too, right? So during the pandemic, I think a lot of small businesses learned that everybody really wants to help them, and the more you ask, the earlier you ask for help, the better off you are. So again, us as consumers, you wanted to have a payment holiday on your car payment or on your credit card. Businesses were available to be able to do that. And the same applies on the small business side. We saw less small businesses reaching out to the credit departments or the account receivable departments of the suppliers they work with. But if you need to have an extra 15 days on a credit term, businesses are open to that as long as they understand why you're asking for it. So don't just think because you have an invoice that comes across your business that it's locked in stone. They want to make sure that the success of your business goes on because they want to keep you as a customer, just like you want to keep your existing customer base. So whether that's with a large supplier you have or your bank specifically, the earlier you have those conversations, the more they'll be invested in your success. So don't wait for that payment to be 3 days late or 4 days late, or have that reserve story in place saying, hey, the check's in the mail. If you have those conversations earlier, you'd be surprised at the mechanisms and the conversations you can have and how they can set you up to not only survive through any difficult time, but also to grow. The other thing I would say is that small businesses, not all are aware that you actually have your own credit file and credit score as a business yourself. So just as you go through and, again, apply for a mortgage or a car loan, that financial institution or lender is going to be looking at your credit report. Same thing happens with a small business. It might happen in a bit in the background, but use a small business, have a credit report, have a credit score. So anytime you fill out an application, it's not just, hey, who are you as a business principal? It's looking at the history of who you are, how you've paid back other organizations. Can they compare a credit or debt that you've had with another organization to the debt or commitment that you're about to make as well? So again, having those conversations with your existing financial institutions and suppliers is going to help you set yourself up for relationships with others. So not saying, hey, go through and purchase your own credit report, but just understand how that ecosystem works. The better you pay back on your existing suppliers, the better you're going to set yourself up for the future. So it might mean taking on smaller commitments now while you have the ability to, so you can actually grow and extend your business further. So the deeper you put yourself, you're going to have less people on your side. There's a lot of people out there, whether it's the federal government, suppliers, or your bank, they're all rooting for you and don't feel like the world's collapsing on you, even though all these headwinds are happening. So again, just plan for the future, take on what you can, where you can, and just know that everybody's on your side.
Thank you so much for joining us, Jeff. Your insights were invaluable and really, really appreciate your time and expertise today. You were very informative and detailed and thorough. And I believe our audience will find this podcast very informative. Thank you so much for your time today.
Thank you very much for having me.
And that's a wrap for today's episode of the Canadian SME Small Business Podcast. We hope you found our conversation with Jeff Brown insightful and informative as we explored the financial challenges and strategies for small businesses. Before we go, we'd like to extend our gratitude to our valued partners who make this podcast possible. Thank you to our exclusive banking partner RBC, our exclusive shipping partner UPS, and our exclusive accounting software partner Xero. Your support is crucial in bringing you these valuable discussions. If you enjoyed this episode and want to stay updated on all things small business, be sure to subscribe to our podcast. We welcome your feedback and questions, so please feel free to reach out. Small business owners, remember you're not alone in facing financial challenges. Take the advice and strategies shared today by Jeff Brown and keep thriving and striving for the health and resilience of your business. Until next time, stay inspired and keep building your small business success story.